Key considerations for starting a bank. 1. Regulatory capital requirements. Starting a bank requires meeting strict regulatory capital requirements, typically involving a minimum capital level as a percentage of risk-weighted assets for financial stability. 2. Minimum capital. The minimum capital needed to establish a bank can be substantial, ranging from several million to tens of millions of dollars or more, depending on the bank's size and complexity. 3. Initial capitalization. Beyond regulatory capital, factor in the initial capitalization for your bank covering startup costs, operating expenses, technology infrastructure, and working capital. 4. Type of bank. The type of bank you're establishing influences capital requirements. Commercial, investment, community, and online banks may have varying needs and obligations. 5. Business plan. In your business plan, specify your capital requirements and provide a detailed financial projection for the initial years, considering revenues, expenses, loans, and other activities. 6. Risk tolerance. Your risk tolerance as an entrepreneur or investor is a factor. High-risk endeavors or aggressive growth strategies may necessitate more capital for potential losses. 7. Depositor insurance. If you plan to accept customer deposits, you may need to secure deposit insurance, which involves paying premiums. 8. Raising capital. Capital can be sourced from private investors, venture capital, institutions, and public offerings, raising it through common stock, preferred stock, and debt securities issuance. 9. Capital planning and stress testing. Comply with regulatory requests for capital planning and stress testing to ensure the bank's resilience in challenging economic conditions, necessitating capital reserves. 10. Market conditions. Economic conditions and market trends can influence the cost of capital and the availability of funding.